I already know the chances are slim or none, most def. However, I'll try my best to wear my superhero suit and do my best to fight the most common misconception about taxes in Italy. Yes, the ones that you're still hearing and taking from the internet, the ones that when you turn off your computer screen and speak with your friend will make you say, well, you know what, maybe Italy is not the place to be. Wealth tax, worldwide taxation principle, 43% tax rate no matter what, capital gain flat tax of 26%, penalties up to 240%, and so on. Sounds like a horror movie trailer, doesn't it? Let's take a few moments to break this in small pieces and see if everything looks as bad as it seems. Let's start with the wealth tax. Yes, in Italy you pay a flat percentage of foreign assets like investment and properties simply because you own them. But a lot of countries already apply the local tax that is higher than the Italian one. So if there is a tax agreement in force, there is nothing to pay here as difference. Same for retirement accounts. A lot of them may be considered tax-free here in Italy. Worldwide taxation is the mother of a lot of sleepless nights. And it's the source of the foreign tax credit principle. For almost every source of personal income, there is a different way to deduct and estimate foreign taxes against the Italian tax bill. How can you be so sure there is anything to pay then? How do you know if the tax basis in Italy is the net or the gross amount of your foreign rental income, for example? 43% flat rate is the enemy number 2. And it's not true at all. You'll be required to pay this tax rate, yes, as a percentage, but just on the part of your personal income that goes beyond the 50,000 per year, net of any deductions. Indeed, the lowest rate up to 50,000, for example, 15,000, okay, is just 23%. Once again, I bet a lot of countries can charge more than this lowest rate. Capital gains and real estate gains in general, interest and dividends are more likely the only trustworthy bad news you may hear about if there is no tax credit given, if the basis is the same, if the gain is a real money takeout, if you fit few requirements. Otherwise, it's not considered taxable at all. Last one, penalties, fines, sanctions. I confirm they, and I'm talking about the Italian Revenue Agency, okay, don't like expats trying to behave in sneaky ways, pretending they're smart enough to apply rules as they want, hiding income and assets. In my almost 17 years of experience, I see that being proactive is the best way to stay out of the troubles. Declaring everything, finding the best way to be compliant first, and then only after that, looking for good alternatives for tax saving is the best strategy ever. And if you make any kind of mistake about paying less or missing information, you have several years to fix it back before they start owing you. If you're doing your budget and your life in Italy looks horrible, it could be a matter of misinformation or, yes, a deep lack of cash flow. Unfortunately, I can just help you with the first one.